This is Eric Mwatha with Mwatha.com. It is December the 4th, 2012. We are looking at the Dow now down about 8 points. It's been, let's say, hovering about the unchanged level. We'll see what the charts are trying to tell us. Now, if we begin with the NASDAQ daily chart, what you see is that over the last couple of days, we came in contact with the declining 50-day moving average, which seems to be, as of right now, we are about 2 or 3 days removed from that resistance level. So that seems to be some type of a roof in the market. We are now seemingly moving back below the 200-day moving average. Not a very good sign. Also, we look at the NASDAQ from a daily chart, and this line here seems to be a back test. We failed here, which corresponds with that high, and we had this significant drop. We've come all the way back and hit that line and are now moving back below that level. So that line tells me that could be a level of resistance here, sentiment wise, and maybe we are pushing lower. Also notice that we are very close to moving below the 50. So anytime we move below the 50, we are going to see a big push into the close as far as the major markets are concerned. So those are some of the things on the NASDAQ. Generally, we look like we are on a turnaround mode where we want to go down. If you take a look at the Dow this time, you see that on the 50, or trading closer to the 50 level on the RSI, it is just about to move above 50. So this push and pull in the market that you're seeing, the volatility, is the market trying to decide, does the Dow get an opportunity of moving above 50 and a big up day, or does the market push the NASDAQ down below 50 on the daily RSI and we have a big down close? So that's, I think, that's the fight that's taking place. Also, you can't help but notice that we've been finding it very difficult to stay above the 200-day moving average. And anytime you hit the 200-day moving average and start pulling lower, especially when you're trading below it, it's never a good sign. So let's watch that and see what the market is trying to do here. But that 200-day moving average is ever becoming troublesome for this market. Don't forget, again, seems to be a direction here being picked by the declining 50-day moving average. If you take a look at the Dow from a weekly perspective, you'll notice that it had tried to move above the 10-week moving average there, but now seems to be pushing back below that. And every time the market trades below the 10-week moving average and the 33-week moving average, you always get a pull or a push to the downside. Like we did here, we were trading below the averages, you got this bearish move. We were trading below the averages here, we got this bearish move. And anytime you're above the averages like we did here, you get a nice rally. Above the averages, nice rally. Above the averages, you get a nice push. So right now we are setting up as if we are struggling to hold the 10-week moving average. And without adding anybody's opinion, that suggests a market that wants to go down. Also notice that this black line here, we broke below that a couple of weeks ago, which is this push here, this movement lower there. And what I'm observing is we came all the way, we're trying to move above that line, failed, and are now moving back below that line. So you can even see that even from a backtest perspective on the weekly, there seems to be some resistance there as of right now. So we'll see where the market closes for the week. It's only the second trading day of the week, so we can't conclude that the week is going to be down week. As of right now, if the market closes here, it's showing resistance on the 10-week moving average. The S&P 500 has been the stronger of the three major indices, the NASDAQ and the Dow, and you notice that it hit the 50-day moving average and is stalling right now. Now, this is yesterday's close. The reason why I'm showing you yesterday's close is because it closed with the RSI at 52.54. Anytime you stall around there, like again, we see a back test here that is failing there. So if we push below here and move below 50 on the RSI, the market is going to have a big down day. So this is today's S&P 500 daily chart, real time, and you see that the RSI is ever so closely getting close to that 50 level. So we might be looking at a day here that the market might be wanting to go down. Take a look at the dollar. Now, we talked about the dollar breaking below 50. That might be bearish for the dollar, bullish for the general market. And that has been pretty much the case. Market's been moving slightly higher net over the last couple of days, But what I'm observing here is the dollar broke that 50 level, which is accurate. We broke that level, and now we see that this buy point here that pushed the dollar higher becomes a possible support on the downside. So this was a buy here, extend that line, and this is where we seem to be holding as of right now. It's very early on in the volatility as far as the dollar is concerned, but to me it seems like, and this is not it's not written in stone, but it seems like the 50-day is starting to call to the upside. We have the 200-day moving average wanting to stabilize, and the 150-day moving average still pointing lower. So to me it seems like these averages wanna eventually trade up, but that's speculation, honestly, because we haven't seen that take place. All I can say is, to me, from this chart, it seems like the dollar is trying to hold that level there. What that might suggest, if I am right, is we push high on the dollar and put some pressure on the general market as of right now. Take a look at the USO, and I'm using the USO so we can track the crude oil market as a commodity play, and you'll notice that it hit the declining 50-day moving average and is stalling. So we hit the 50-day, stalled. Also notice that we have a 50-day moving average that is about to make a 52-week low. This moving average here, the 50-day, if it breaks that level, that's going to be a fresh 52-week low on the 50-day moving average. And whenever you see a moving average make a new high or a new low, it means that the price is going to be pushing much to the direction of the break, whichever it is, up or down. So if the 50 cracks this level here, it suggests that the price is going to follow through and also make a fresh 52-week low. So to me, this commodity space with the 200-day moving average also pointing lower still remains negative or bearish. We talked about silver last week, and we took the highs there, and that high we were stalling. As of last week, we were trading somewhere in that range, and we see now we are pushing back below. So that has now been confirmed as resistance. We also talked about that this line was predictive of where it could stall. It hit that level there, and on Q we see that we are getting the RSI pushing lower, and price is now also pushing lower. So like I said, the only time you want to get back in silver is if it can break this 33 level or 34 level. If it can break those two levels, then maybe it's pushing higher. As of right now, it looks like it's stalling. Let's take a look at the GDX, which tracks the gold mining stocks. And just without going into too much detail, notice that we have a declining 200-day moving average. We have a declining 50-day moving average. Just by themselves, those are bearish indications. It's tried to move above the 200-day moving average here, failed, and now pushing lower. So again, we don't see any buy signal as far as the GDX is concerned. If we take a look at the GLD gold, you'll see that we have it's trading below or between the 50-day moving average and the 200-day moving average. So really, it's in no man's land. The next time you'd like to buy gold, if it's when it can break out above recent highs that it formed in November. You want to buy gold when it's breaking out, as opposed to buying it here, because it could be on the way down. So again, gold is in no man's land. You don't want to fight it one way or the other. Now let's take a look at some long-term picture here. And this is a monthly for the Dow. Being that we are at the beginning of a month here, it's really important to understand that the long-term picture of this market with this wedge here, and the fact that we seem to be breaking it is very, very, very bearish. The long-term picture in the market as of right now is absolutely, quite frankly, scary. You also see that the MACDs are breaking this trend line here. Seems like the next push is below zero. And anytime we move below zero, the last time we did that was here, which, if I can show you, that was sometime in 08. It's the last time the market really pushed below zero on the MACD here, was in 08. And you remember how the markets were in trouble. So if we push below here again, below zero on the MACD, it might not be pretty out there as far as our portfolios are concerned. The S&P 500, quickly here, is, you see, if you take the highs 2007, that's not my opinion or yours, the highs on the RSI 2011, the highs 2012, the highs again 2012, you'll find that we are hitting resistance on the top lines on the RSI. Like I say, it's not anybody's opinion. That's what the market is doing. That's not a good sign, because it shows resistance. Now this was the S&P 500 20-year chart, 20-year monthly chart. This is the S&P 500 9-year monthly chart. I wanted to get rid of all the noise from the previous chart and show you what's going on here. Take the highs, draw a straight line. You see that we are hitting this level here. So even this might be a double top on the RSI. If we break below that, that's a major get out of the market sell signal by itself, So also you have to respect the fact that since 2011 we've made this major monthly closing highs. We've made incremental monthly closing highs, but notice on each time we made lower RSI lows. That's a bearish development. So the long-term picture in the market, quite frankly, and remember this, is not very good right now. Let's take a look at one more chart, which is the VIX. Now the VIX is not giving us a buy signal, and it's not going to give us a short-term buy signal until and when it breaks out above 19.08. So set your alerts at 19.08. Whenever you wake up or whenever you see the VIX thrash and blast above this level, that's going to be your cue that the market is going to be on a short term, maybe even the beginning of a long-term trend lower. So watch that. But what I like about the VIX, if you're bearish, is the fact that this was a buy point that took it a little bit to that side higher, and it's come all the way back, bounced off this level here and moving higher. So this is where it probably starts moving again based on that chart. Also, from a generic observation, you'll notice that it seems to me that the moving averages are now starting to coil, and these things take a while to coil, but they are coiling in one direction, which is to the upside. And the only thing that can move the moving averages higher is by a price move and a break above 19.08. That's what I believe is taking place. So right now, to summarize this video, it seems to me like the market is pretty much in no man's land, but starting to look bearish. Okay, it's not necessarily bearish, but it's got the look and feel that it's setting itself up for something like that. So we have to be a little bit cautious here before we go into another buying spree. Just kind of watch it. Make sure you have stops. That's the most important thing. Make sure you protect yourself. This is Eric Muather with Muather.com. I'll send you more videos as I find breakouts or as I find new market observations. I apologize for the long video, but it's a lot to share. Peace and blessings. I am out. Woo!